Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for October 8th, 2007. Well, today was Columbus Day, and in tune with Columbus Day, we knew light volume would be in this market, and it was extremely light. We're talking about a light volume normal day before a holiday weekend or something being in the realm of 1.2 million contracts on the ES, and you're looking at the intraday ES here. And what we saw today was even super light volume. And what I mean by that is, instead of 1.2 to 1.5 being a light volume before a holiday weekend type thing, today we saw about 700 to 800,000 contracts traded in all. And on a normal day, just to give you guys a sense, we're talking 2 million contracts traded on ES. So again, 2 million is a normal day lately, and a light day would be in the realm of 1.5 to 1.2 million. And today we saw about 750,000-ish, give or take. So again, extremely light volume. And well, in general, what we always talk about is light volume favors the flat line to upside. And on the Nasdaq, that came true. Again, the Nasdaq has been the stronger of the indexes, and it continues to be extremely strong. And on the Dow and the S&P, we saw a slight little pullback. And that can be looked at as, well, last week we saw a monster rally, especially on Friday on those jobs numbers. So all in all, it's not surprising to see a little bit of a pullback here, even on light volume. Now, what I would like to point out is that we are coming into some interesting times over the next few days. And what I mean by that is this. Well, Alcoa starts reporting. We have some interesting economic data coming up. Fed funds minutes coming up. The Fed minutes are coming up. And overall, we should get a better view of what's going on. What we have seen is the 10-year yield strengthening, the dollar strengthening, which we talked about 2 weeks ago. 2 weeks ago and about a week ago, for the whole time we kept on saying expect the dollar to find a bottom here, when everyone else was saying, oh no, is the dollar going to crash? And we have been seeing the dollar strengthen. And what has that caused? Well, that's caused the USO to give back huge amounts here. Alright, let's look at the daily USO. This is where we were talking, right in this area is where we were talking about the dollar possibly gaining some strength. And because oil is traded in US dollars, when the dollar increases in value, oil must fall. And it pushed pressure on the oil chart here, and again, this is the USO, the United States Oil Fund. And again, for the first time today, we saw a close below the 20 moving average. That's a bearish signal right there. In addition, note how the stochastics were flatlining here. They stayed flatlined for a while, and now they've finally begun to come down. And what we should see is possibly a little more downside, although oil was down in the $2 plus range today, and that is a sizable drop. So the question must then be asked, well, do we drop more, or do we have a small bounce before we drop more? And that will be seen in the next few days what will happen. Alright, in addition, the GLD. The GLD has seen some weakness here. Ever since this area over here, we saw it move down 87 cents today on the GLD, which is the gold. It tracks gold. And again, that coincides with the dollar strengthening. So keep that in mind, folks. Now, the other thing I want to talk about here is the ES intraday. And we're going to go over some intraday and daily stuff now coming up. And again, there's not a lot to say on the daily chart because it was such a light volume day, and the intraday as well. But what I do want to point out is this. We started the markets here, and we kind of had a pretty sharp fall. And then the whole afternoon is light volume. Look at the volume down here, guys. You're talking about in an average volume bar here, but about 7,000 contracts, which is minute in the middle of the day here. Until the end where we saw a little spike up on a little heavier volume, but still there was not a lot of volume in this market. And it's a very tough market to read because you don't have the same characteristics of technicals coming into play when the volume is that light. So it's almost untradeable of the indexes. Alright, however, there were plenty of good trades today. Believe it or not, considering how light we expected this day to be, day trading wise, we still saw some nice plays. Early on we saw REDF and SIFY, some Indian plays mentioned in the intraday stock chat last night, and in the chat room multiple days ago. And we'll go over those shortly. But again, you can just see here, this is how the day went. We started up here basically around 8 o'clock, 9 o'clock, 10 o'clock we rolled pretty hard, selling off about from all the way from 1566-ish all the way down to about 1560. Now that's really not a big, it looks like a bigger drop than it is. It's a small drop in general. And then what you basically saw is choppy trading, slightly higher most of the day, ending right here. Okay? Looking at the daily chart. And this is an interesting chart pattern here because I want to point something out. And we're going to use our trend tools. We still have this underlying trend, but we're well off that trend now. And again, I keep on pointing that trend out. And let me get it so it actually stays there. But you can see how we hit this trend and bounced up, hit this trend and bounced up. Looks like we've now created a new trend line, and I'm going to draw it from right here, alright, and it looks to be right in that area, alright, and you could even draw it to the bottoms right here, and we can see that we do have a new trend. But I tend to like to do it a little more so it's parallel with that the bottom level. And note here now the parallel lines forming. So we have two trends. We have number one, which we can look for a break of this new trend, and I believe we do sell off down to the 20, pierce the 20, and hit this second pink line. At that point, you're going to hit some pretty strong support levels. All right. In addition, what I also want to point out is we have a third trend, and you're going to see here it's the third parallel line. So we really have a middle line, a top line, and a bottom line. And these are all supports. Now, this is the biggest, this is resistance up here, and this is key to note. Notice how it coincides here. All these trend lines coincide with points. And notice how every time we hit this upper level, we're selling off. And we hit it on Friday, and now we sold off today on the ES. And it's very important to note that. Then in addition, we have this support line because we're above it. When we're above a line, it's support. When we're below, it's resistance. And every time we come down and tick here, we seem to bounce up. So the question must be asked, well, at which point do we break which line? And my gut tells me that we should be breaking this line here and making an attempt to just pull back a little bit here. We're not saying that we're going to have a large pullback, but in any result, you should have a small pullback here, healthy pullback in this market, at least down to this 20 and this pink line here. All right, once that's done, then we can reevaluate the market to see if it's a buying opportunity, or are we going to go lower? Should we close below this pink line? We could go down to the 50 moving average here. All right, so again, it's very key to understand trend lines, guys. Trend lines in the market are almost number one when you're doing analysis on your own. You need to understand how to draw the trend lines, where to draw them from, and how to analyze them as support and resistance lines. And you can see how important they are. You basically have a move here, and then down, here, down, and this is constantly. Then we hit the upper end of trend, bounce down, we break finally through, pierce it, but we never close above that line, and that's key. All right, let me show that again. Notice how the tail is up there, but we never closed a candle above that line. We bounced down, bounced up, bounced down, bounced up, and then we sold off to here today. So again, I'm going to show that here, and you can see how important these trend lines are and how strong they are. Okay. Also, what I want to point out here is just be aware that our volume, again, has been decreasing a little bit, and we'd like to see a little stronger volume if this market's going to continue up. Okay. Let's look at the Nasdaq, because the Nasdaq's been the stronger of the bunch. Okay, here's the Nasdaq chart, and look at how the difference in chart is, all right? You had this much stronger uptrend. You took out the high from before right here, earlier in before the fall, and we continue to rally up. Now, you still have a trend line under here, but the Nasdaq is really the place to be if you happen to need to be long in this market. And again, we're individually in stocks individually long, but we just can't go long on an index when we're this high. And again, I want to show you the stochastics here. This keeps me out of a trade, and that's the only reason I use it. All right, stochastics, you can look for negative and positive divergences, but you don't. But I use them as more as entry point indicators. Okay, and I'll show you what I mean by that. Okay, now what I'm going to show you here is we also have that upper trend, and we keep on bumping up. You can draw the parallel lines here again, and we keep on hitting above this upper trend, which makes me feel like we also need to dip back down. My analysis should show here that we have some support right at this line now. The break of that high now becomes support. It was resistance. Resistance becomes support on the way down now that we've broken through that. If we break that line, we might see a move to this 20 moving average trend line, at which point we can reevaluate. Now, I want to get into stochastics a little bit, guys, and I want to show you guys something. In general, you guys hear me talk about how the stochastics are high and low. The only reason I use that is for basing my decisions on entry. That's the only reason I use whether stochastics are toppy, like they are here, or on the bottom, like they are here. So this is where I use them as basically a caution signal. When you have stochastics this toppy, they can stay that toppy for a while as the market continues to push up. However, at some point they do need to come down. It's just the way it works. You can look down, up, so forth. You just see them come up and down. So my point being is I'd rather wait for a small pullback in the stochastics with the market to go long. Now, there is the other analysis tool where you look at pure indicators, meaning that there's negative or positive divergences. And I'm going to show us here a VRSN, VeriSign, and I'm going to show you this chart. Now, I can't do the annotation here because it's on. It doesn't show up as well on this, but I did bring this, and I want to show you guys. All right. And what I'm going to show here, and let me bring it up, is we basically have some other indicators here, and I'm going to show you guys. What we have here is VeriSign, and I drew a little annotation here, and I want to show you guys. From this peak to this peak, you have a rising trend line, right? It's increased in price. Now look at the MACD and the stochastic here. The stochastic, if you draw from this area here, you basically see a declining, even though the price increased, you see a declining stochastic. In addition, you see the MACD right here, higher here than it is over here. And that's called a negative divergence. And that gives me the essence of whether or not to go long or short a stock. If you see positive divergences, meaning the price is moving down like this, and the indicators are telling you it's a positive divergence, meaning an inclining MACD or stochastic, that generally tells you that you can look for a buy and an entry price and go long that stock. However, the VeriSign here is telling me with an incline in price from the trend line and a decline in the stochastic and the MACD that you need to be careful in that instance. So that's the other way of using stochastics when you're trying. So again, I want to just point that out, is that when I'm looking at stochastics being overbought, it's just telling me, okay, maybe wait for a pullback before going long. Alright, that's the only reason I use stochastics. I use them intraday to day trade, and it'll keep me out of a day trade. If a stock has already run up 20% and the stochastics are flatlining on the top, it's going to say, wait a minute, don't jump in. It's the only signal I use.